Good morning everybody and welcome to this European session on Thursday the 19th of September. Hope you are all well. So we finally had that all-important news announcement which has for July and August really created some fantastic, incredible moves in the US dollar pairs. Since September, first week, fantastic, but since the last week and a half, we've been dealing with more lower volatility, range-based situations, causing us to kind of lower our risk, go for higher reward to risk opportunities, look for more positional setups and strategies, and also shift focus in asset classes as well, with more speculative capital flowing into stock indices, with beautiful trends to the upside, hitting record highs, because of all these news announcements coming out. And really, what we had was the Federal Reserve, US Federal Reserve, cut interest rates 50 basis points. And this is more than many market participants were expecting. Widely expected there was going to be a 25 basis interest rate cut, but they actually decided to cut 50 basis points. And this is the first interest rate cut since the early days of the COVID pandemic. And this is why it's been such a big deal, and it's been a big driver of the key themes and trends that have been developing across all asset classes over the last several months. And the larger than expected interest rate cut was designed to head off a slowdown in the labour market. So whilst the US unemployment rate is historically low, it has been rising, and the underlying data does show there are some issues in the new hiring of jobs. So the Fed wanted to get ahead of that before a cool down in the labour market. That's why they've done this bigger interest rate cut, stimulate economic activity, get businesses to borrowing more money, to invest in expansion, hire more people, get people in the economy borrowing more money, do up their house, buy a car, just get the economy running again. Now, there hasn't been much follow through on most markets due to extreme positioning we already had. We already had US stock indices, the S&P, the Dow Jones trading at record highs. We already had gold trading at record highs. We already had a lot of the US dollar pairs had been trending lower, and they were being range based over the past several weeks or so, because historically it's a bullish time for it, so there's a lot of different fundamental drivers conflicting each other. So we had this kind of extreme positioning, so we had a bit of volatility, really big spikes on the bars and the charts that you'll see, but not much follow through just yet. However, Goldman Sachs believes another 2 interest rates are coming in November and December. And this becomes interesting because now if the Fed are the central bank which will be cutting interest rates the fastest, this will put more pressure on the greenback, the US dollar. The reason for that is because of interest rate differential currency strategies, where many money market fund managers then will still be sending their dollars or borrowing US dollars at a cheaper rate, selling those US dollars and then going parking them into countries which have a relatively high interest rate. Now, again, there's not many other countries increasing interest rates, but for example, the Australian dollar, the British pound, these central banks are not really looking to cut interest rates as aggressively as many others, right? So there could be some decent flows in pounds US, Aussie US. We'll keep an eye on those. In fact, Aussie US has been the better performer overnight in the Asia session because of this interest rate differential strategies being done by money market fund managers. So we'll keep an eye on those. Of course, stock indices, the Nasdaq is an interesting one because that hasn't gone to a record high just yet because of the biggest sell-off in tech companies with the AI crash that we had. Obviously this year we had a really big boom in AI stocks, and of course a lot of them had a lot of profit taken in the past few months. So we're looking for the Nasdaq to kind of play catch up, to the S&P, to the Dow, eventually get to that record high. So potentially some really good opportunities there. So some good things to keep an eye on. I'll do my very best to highlight any potential trading opportunities in these short webinars, but make sure you're tuning into all the other live trading webinars every single day, so then you too can identify those opportunities and participate in them as well. Now, today we also have the Bank of England monetary policy statement. And at midday, the UK official bank rate is expected to stay the same at 5.0% with no changes expected. Now, the Monetary Policy Committee official bank rate vote is going to be key. Last month it was 0 to 7. And basically what this format means, the first number is the number of the Monetary Policy Committee members who want to increase interest rates. The second number is the amount of members who want to cut interest rates. And the last number is the amount of members who want to keep interest rates on hold. So last month we had 2 of the members wanting to cut interest rates and 7 keeping them on hold. So really what we want to look for are any significant changes in this. Are some of the other members who have wanted to keep interest rates on hold, are they going to start to shift to start decreasing interest rates? And that could give us better insight into what could happen in the future regarding interest rate policy, and then we can position ourselves accordingly if there's any significant changes and any good market reactions. So again, something to keep an eye out on. And while other central banks are cutting interest rates, then pairing the British pound to these lower interest rate countries and currencies could see some higher priority trends develop. So we'll keep an eye on any pound pairs. If it pops up onto your watch list when you're building your fast time frames, you get your nice cycles developing off the moving averages or the moving average zones, already telling that algorithmic traders are building positions. But then we have the fundamental narrative acting as a driving force, and when we get those technicals and fundamentals lining up, beautiful. It gives us more confidence. We can go for higher reward to risk. We can be a little bit more aggressive in the amount of trades we take because we already have a more of an edge on why the market is moving in that direction. All right, so a bit early right now because we've just had the news announcement and the markets are just kind of sorting themselves out. But over the next few weeks, as we see out the month, we're going to be looking for these trends to develop, which they will do, right? Because past week and a half been relatively quiet. There's been good trends. Stock indices have been really good on the way up, so really good opportunities there. Currency market, we've had some good trends on some of the yen pairs and Aussie pairs, but not as big as we had in the months before. But we're expecting some really big things, some incredible moves as we see out the month. We've just got to wait for all this uncertainty to pass, and then boom, we're off we go. All right, for now, let's dive into smart charts and let's see what's going on there. Okay, so here we're in smart charts, and some of the talk among the traders in the London and Sydney trading floors inside the smart charts has been on some of the yen pairs, okay, because we know we had the Bank of Japan monetary policy meeting coming up over the next few days as well, which could become quite interesting. And we've really been looking for continuation in those yen pairs. So we know that in this instance, we've had this massive crash in those yen pairs, great opportunities across July and August. Then we had this big rally back up into the moving averages, and then we've had some good trends on the way back down, all right? And in this instance, we've got price pushing back up again. So we have what is known as a descending triangle formation here, where price is making these lower high cycles, these really big ones, okay, but it hasn't yet made lower low cycles. So it means that sellers are still in control of the market, but because we've already had a big move, there's not as many willing to keep driving it to new lows. So the key here is that this is like a pressure cooker, all right? Sellers are still building positions, and eventually, okay, it's going to break through that support level, and we get a continuation of a trend. So that's the theory behind a descending triangle formation. So some traders might wait for price to break outside of a descending triangle, but we can also position ourselves inside of it as well. And what we have here on this currency pair, you can already see on top of what smart charts is finding on this daily power pivot strategy, we are coming into this zone here where sellers have actually turned up before. And we're also on this moving average where sellers have been turning up multiple times before. So we've got a confluence of resistance areas where sellers could already turn up. We also have momentum indicators also starting to drive lower as well, which is good, and we're looking for that momentum to build. And we also have that lower low, lower high cycle telling us sellers have been willing to sell this market beyond low prices. So let's see if they're willing to keep on selling beyond these low prices as well. And actually, big picture, we have been looking long term that for price to get into this historical zone. So you can see historically price had these ranges here, then it broke out into that smaller trading range there. So we're looking for price to really get into this area here. So we're looking for price to push lower. So in this instance, we've got a variety of factors on why sellers may decide to turn up, and we've got a bit of a clear run here into some of these longer term levels based on what that descending chart pattern is actually telling us, right? So the combination of using algorithmic technology, AI technology, along with human insight and human real-time pattern recognition, understanding sentiment, very, very powerful to get a combination of leading and lagging evidence. So on top of helping to identify opportunities, it will do the most important work, which is risk management, all right? So in this instance, if we click the sell icon, populate an entry price of the blue dot, stop loss of the red dot, target the green dot, and these can all be adjusted according to your own user preferences. It will also do the reward to risk calculations. Important to keep that risk low to make sure you're able to deal with the random distributions of wins and losses that develop throughout the day, throughout the week, throughout the month, all right? And we'd like to set an expiry of the current bar close, and what that means here on the daily chart is that if sellers don't turn up and continue momentum, pending trade expires, didn't win, didn't lose, didn't cost you anything, okay? If obviously do decide to turn up and go for your entry level, then it will go to your target level or your stop loss level, all right? And sometimes what can happen if you're trading end of phase 2 cycles, beginning of phase 1, sometimes the phase 2 can keep on going, right? Because sometimes you might get a bit of a zone, sometimes it might stagnate. So you might find yourself placing a few orders over several days that expire, and then finally it goes, all right? And that's completely fine, right? We can't time the market. We've got to be prepared that, look, if sellers do turn up here because they've been turning up here before, we want to be prepared to also capitalize on that price movement as well, all right? So preparation is absolutely key. Preparation, and not in just how we position ourselves in the market, but preparation in how you turn up to run your trading business, the focus, the routine, pre-market preparation, and so on, all right? Okay, that's it from me. All the best for your trading today. Bye for now.